Hello everyone and welcome to Markets Analyzers. For the fourth straight day, Nifty closed in red with a loss of 152 points. In last 6 months, Nifty never traded with a losses in 4 continuous trading sessions. So you can understand the negativity around the markets. First, let's clearly try to understand global markets. Even similar to our markets, US markets also fell for a fourth consecutive session on Wednesday. US markets are moving downside due to weak results by a big semiconductor company called ASML. Along with the disappointing results, there was also a spike in US bond yields. Slowly, there are negative signals coming from US Federal Reserves that inflation is sticky, which means inflation may take longer to reach the target of 2%. So investors will be looking for further clues about the strength of US economy amidst growing concerns that the Federal Reserve will delay interest rate cuts until later this year. Yesterday, Mary Daly, the president of the San Francisco Federal Reserve Bank, said that there is no urgency to cut US interest rates with the economy and labor market going strong and inflation still above the Fed's target of 2%. So, such statements coming from one of the US Fed's president is a negative concern. Due to these reasons, the bond yields are increasing. If bond yields spike, then it's a negative for equity markets. Along with that, the news that US government had decided to reimpose oil sanction on Venezuela has increased crude oil prices. However, there is also geopolitical tension in the Middle East. If we talk about FIIS data, before that, the sentiment is bearish globally with geopolitical uncertainty on one side and inflation concerns on the other side. So this inflation will put pressure on US Fed to not cut interest rates until they are confident that inflation will clearly come down to their target of 2%. Now coming back to FIIS, try to observe this very carefully. Yesterday, which means on 16th because 17th was holiday, on 16th, FIIS, foreign institutional investors. FIIS means they are some of the big investment banks, hedge funds across the globe. FIIS are considered very intelligent investors. In F&O, futures and options, FIIS are expected to be right in most of the cases. It means if FIIS are bullish, the markets are expected to go up. If they are bearish, the markets are expected to go down. On 16th, FIIS in index futures, in Nifty, Bank Nifty, in those index futures, they had 1.6 lakh short contracts. It means 1.6 lakh contracts expecting fall in markets. And they had bullish contracts of 1.25 lakh. I am repeating this again. On 16th, Tuesday, FIIS had 1.6 lakh short contracts and they had 1.25 lakh bullish contracts. In percentage wise, they had 56% short contracts and the rest 44% were long contracts. If you look at today's data, on 18th, their total shorts increased from 1.6 lakh on 16th to 2.07 lakh on 18th today. In between there is 17th which was holiday. In a single trading session, FIIS had increased short positions by more than 40,000 contracts. If you look at long contracts on 16th, they had 1.25 lakh contracts. Today they reduced it to 99,000. Longs are being reduced, shorts are being created. If we speak in percentage terms, their net short on 16th was 56%. As of today, their shorts are at 68%. I think you are very clear about FIIS and their view. While explaining about FIIS, if you remember, I told FIIS are smart investors and they will most likely will be right. If you speak about retailers, the trades which done through brokers in F&O, people like us, we will trade in future and options through brokers, right? If you look at our data, in futures, retailers data, before talking about retailers data, the retailers are expected to be wrong for most of the time in F&O. FIIS are expected to be right and retailers are expected to be wrong. Clear, right? Now, with the premise set, let's talk about retailers. The trades which done through brokers, they are called clients. They had 59% long positions on 16th. Contracts wise, they had 2.6 lakh long contracts and 1.8 lakh short contracts. As of today, 18th April, they had 63% long positions. It increased from 59 to 63%. Even the contracts which were 2.6 lakh longs has increased to 3.1 lakh long contracts. As we look at this data, it is very clear to understand why retailers will lose money in most of the cases. Keep both FIIS and DII'S data aside. I will come back to that in a while after discussing Nifty's price action. I will try to combine price action with FIIS and DII'S data and try to give you some logics on why retailers are failing. This is today's Nifty's chart in daily time frame. We all know that the global sentiment is negative. US Fed, inflation, geopolitical tensions, bond yields. So there is so much negativity to speak. And for last 4 consecutive trading sessions, Nifty is moving down. Now look at Nifty's chart. Just look at this plain price action. What is this trying to tell us? On 10th April, Nifty formed a peak. on next trading day, there was a fall of 1%, a big red candle. We don't have to worry at this point because markets will normally move up and down, and we don't have to change our view by just looking at a red candle. Okay, still the view is, let's say, bullish, and it will be still intact. But again, the following day, there was a big gap down, and we might be thinking there is already a big gap down. The negativity will be factored in gap down. After opening, the markets will likely move up. That's what, by just looking at price action, I would think personally. But price went lower after such a big gap down, and most importantly, it closed below previous swing low. I think that closing below previous swing low is more than enough to change the view from bullish to bearish. Gap down opening and closing at day's low, even after gap down opening and closing below previous swing low. In addition to that, the price closed below 21-day moving average. Okay, just leave all these things. There is no point why retailers having bullish positions today. I will tell you some of the big negative updates today. Still the retailers are having bullish positions. The first one, the price closed at day's low and closed below the trend line. The second point, in daily time frame, the price closed below 50-day moving average. If you had seen charts in daily time frame today around 3 o'clock, you would knew that the price will close below 50-day moving average today. And the most important of all is the Infosys results. Let's say I have a long position in index futures. What if Infosys results are bad? Infosys will definitely open with gap down, which means Nifty will also fall. Do you remember the times when Infosys posted weak results, the stock price crashed by 9%? I won't say Infosys will crash by 9% tomorrow, but what if such a situation occurs again? I have said all these data points which are negative. Tomorrow markets might move up by 1% and you can make money. But what is the logic that made you to take a trade on long side is the most important thing. So in such a situation, the probability, the conviction is definitely to trade on short side, bearish positions. If you now look at FIIS versus clients F&O positions, you will get a clear understanding of why the retailers are losing money. So I hope I have explained everything I wanted very clearly. My view on Nifty is bearish. I am expecting Nifty to fall towards 21,800. Support, strong support should come at this level, 21,800. This is the previous swing low, and OI data 21,800 said is looking strong. Nothing left to speak about our market's outlook for tomorrow. Let's move on to the next segment. Next, let's move on to stocks news updates. First, let's begin with Mastek Limited. They have received an order from UK's Ministry of Defence in the field of digital and IT professional services. Mastek has been a supplier to the Ministry of Defence in UK since 2017. The DII'S framework, it means Digital and IT Professional Services Framework, will continue to work for next 4 years. This DII'S framework has a budget of £1.2 billion. So it is a huge order for Mastek. It is worth more than 10,000 crores in Indian rupees. So after this news update, the share price suddenly hit an upper circuit of 20%. And then gradually declined and closed with an intraday gains of 9%. Next, let's move on to Bharti Airtel. Brokerage firm IIFL Securities, they have published a report saying that they are expecting to see 2 rounds of tariff hikes in next 3 years, which will benefit all the telecom players, Airtel, Vodafone Idea and Jio. Amidst this huge competition in telecom sector, expectations of tariff hikes has moved Bharti Airtel shares upwards today. Even VI shares were also trading on a positive note. Coming back to Bharti Airtel, they said they are expecting a 20% tariff increase in the second half of FY25. It means from October to March 2025. IIFL Securities are expecting a 20% increase in tariffs by telecom companies. And another round of tariff hikes may come in FY27, which could be 15%, somewhere around there. So these tariff increases is a very big positive if they really happen. After today's 4% rally, Bharti Airtel market cap crossed 7.5 lakh crores for the first time. It overtook ICICI Bank, which is at 7.4 lakh crores. Next, let's talk about Nestle. The share price today fell close to 3%. It is one of the biggest intraday share price fall in Nestle from past 3 years. In a joint investigation led by Switzerland's Public Eye and the International Baby Food Action, both of them combined. In this investigation, they have collected popular baby food samples in Asia, Latin America and Africa from Nestle. It means they have collected baby food items which children above 6 months will eat in regions like Africa, Asia and Latin America. The products which sold by Nestle, like some of their best-selling brands like Cerelac. The results of the testing came out that almost all Cerelac wheat-based cereals by Nestle in those above-mentioned regions like Africa, Asia and Latin America targeted at infants from 6 months of age contained added sugar which is equal to an average of 4 grams of sugar per serving. The highest volume of sugar to a product at 7.3 grams per serving was detected in Philippines. In India, they sell almost 15 different Cerelac baby products, which on an average contain nearly 3 grams of sugar per serving. But those same products is being sold with no sugar in countries like Germany, US, UK, France and in Switzerland as well. Whenever a company does something like this, it is called a double standard. If you observe their Cerelac product sales in India, it comes around 20,000 crores in 2022. So it is not a small product, it is not a small issue as well. Adding sugar to a baby product is a dangerous and unnecessary practice. Sugar is highly addictive. It can also cause different negative health consequences in infants like child obesity, tooth decay and chronic diseases. Adding sugar to baby products is a violation of international guidelines. This is the complete news updates about Nestle. Let's wait and see how the situation unfolds. Next, let's talk about Sterling Tools. The company has signed a pact with South Korea's Hyunjin Electronics for establishing electric vehicles EV component facility. This partnership aims to generate 250 crores worth of business over next 5 years. It will also boost the EV and electronic component production in India as well. Sterling Tools will set up a new manufacturing facility to start the production. So friends, this brings us to the end of today's video. If you found the content informative, hit the like button and consider to subscribe as well. I will come back again with another interesting video. Until then, take care and have a great time.